It is the top stock of the day, arguably, Avenue Supermarts. Look at the kind of move that it's had, 12.5% even now, and that's, now a stock in the derivative space. Mahima Johnson to talk about why such a reaction. Now, Mahima, we knew in the morning that the reaction would be strong, but not too many people would have anticipated a 12% up move on Avenue Supermarts.
Right. So basically, there are three reasons that are attributable to this up move in Avenue Supermarts. First one, of course, being the Q3 business update. The second reason is basically the impact of low free float available. Now, this is a common reason for the volatility in the stock price of this particular counter. And the third one being short covering in the F&O segment. We'll take each reasons one by one. First one being strong Q3 business update. The standalone revenue was up around 17.5%. In terms of the revenue, it stood at 15,565 crores versus 13,247 crores. Number of stores as of December 31st were stood at 387. There were 10 new stores added in this counter, and overall 22 stores added in 9 months FY 25. So 10 being significant part of 22 stores is what added to the revenue expansion. Moving on to the impact of free float, if we see promoters hold around 74.7% of total of Avenue Supermarts holding, and only 25.3% is available to public. Out of this 25.3%, mutual funds, domestic institutions hold around 7.5%. The foreign portfolio investors hold around 10%, management holds 2.5% of the total public holding. So this leaves the free float to just 5.3%, and because of this free float being so low, this sometimes lead to lower liquidity, which is why there is high volatility in the prices of such stocks, which is why lowest volumes could see a lot of price volatility of this particular stock, and we are seeing that build up today as well. The third one is the short covering in the F&O segment. Avenue Supermarts was introduced in the F&O segment on 29th of November, and since its addition to the F&O, stock has seen a lot of short positions being built up, and today, since we are seeing an upward movement in the stock, now traders are kind of covering their shorts. We've seen that January 3,700 and 4,000 call options had the highest open interest, and January future contracts reported 19,281 contracts in the open interest as of Jan 2nd, 2025. Now, in terms of what the brokerages are saying, well, the brokerages have varied and different views. In terms of Citi, it has a sell with a target price of 3,500, so around a 3% downside from its yesterday's closing. What they're saying is that the growth rate acceleration is partly led by the store expansion, and margin trajectory will be something to watch out for. And the revenue per store saw a 2.7% 5-year CAGR, and they remain cautious going forward, considering the competitive intensity from quick commerce. And they believe that throughput continues to be impacted due to adverse product mix, store additions in smaller towns, and increasing competitive intensity from quick commerce. Moving on to the next one is Macquarie. Macquarie is still bearish on the particular counter. They've retained underperform with a target price of 3,700, and they say that sales growth is at 17.5%, but still lower than the 18 to 20% normal mark that Avenue Supermarts had. The addition of 10 stores is in line with expectation, but it did not indicate any significant acceleration, and gross margins will improve, but Q3 sequentially might see an EBITDA margin contraction due to the product mix. And lastly, they're saying that rising competition from quick commerce platform will continue to impact the momentum of Avenue Supermarts growth. But UBS on the other side is extremely bullish on the particular counter. They've given a target price of 5,500, and what they're saying is that strong performance in Q3 indicates strong operational execution, and strong execution amidst the rise in competition from quick commerce is something that is being observed. So this is the overall view as to what has happened in DMart and why it's seen such an uptick in trade today.
Thanks for that. That's comprehensive for sure. Now, Gurmeet, thanks Mahima for that. Gurmeet, one, did you anticipate such a move? It's not just Avenue, by the way. I think V2 retail also, the numbers look very solid. What's happening? Is this a sign that urban consumption is probably not as bad as everybody was making it out to be? And now that the up move has happened, What do you do with some of these retail stores? I mean, it could be these, it could be Trend, it could be something else also.
So there's one learning always in a market is never write off good quality businesses, right? You will have periods of underperformance. I think it's a good number update. I think it's actually why it has done well is because it's beyond what the street was expecting, including, there's a disclaimer here, these are festive season numbers. But so if you even see YOY, even October, December last year also was festive season. I think it's a couple of percentage points more than what everybody thought. Also, the SSG, which is the same store sales growth, which is triple SG, beg your pardon, has also grown by 5-6%. I think, and then that metric I think would probably excite people, which means they are working on ticket size, productivity of stores, and those metrics kick in. However, over the long term, Neeraj, I believe quick commerce will, put a lot of challenge. See, our basic consumption pattern is changing, including so the kind of screen time we have is 7-8 hours. We are ordering groceries online. We are subscribing to things which I call digital consumption, whether it's your OTT or your music apps or health apps online. So I think increasingly the consumption basket will become more digital. And for Avenue Supermart or even Trend, to sustain Trend is slightly different because there's an unorganized to organized move, and that's capturing large part of that. A lot of that will have to have a more hybrid model. Otherwise, what you will see is what has happened to not a apple to apple comparison, but what's happened to, let's say, cinema complexes versus OTT. Despite valuation comfort, despite correction, it's not really moving up, right? So I think they have to go digital, whether it is Avenue Supermart or if you have to compare, let's say, with Shopper Stops and others of the world, you have to go digital.
Okay. What about a trade on any of these, Ruchit, now from these levels onwards?
I think yes, most of the stocks have seen a pullback move over last couple of days. And no, if you look at the recent correction also in stocks such as DMart, the stock had corrected from about 5,500 exactly 3 months ago to 3,500. Means a correction of almost 35% was there, which made that momentum readings quite oversold. So I think still the pullback move is not over yet in DMart. I think if you look at the recent correction, then a huge gap area was seen there in the stock in the month of October, and the 50% retracement mark of this entire correction is coming around 4,450, roughly around 4,500. So I think we should see that 4,400, 4,500 kind of range in this pullback move in DMart. So any kind of dip towards 3,900, 3,800 range, I think the risk reward ratio could be favorable over there to create fresh longs in DMart with stop below 3,700 for potential near-term targets around in the range of 4,400 to 4,500.
Gurmeet, what would be those one or two metrics? Of course, top line growth now disclosed with regard to DMart, but what would be those one or two metrics which you would really look out for to determine that DMart has turned around? Would that already be disclosed or could be disclosed post the Q3 numbers through commentary, etc.? But what would that be?
As for Avenue Supermart you're talking about? Sorry, I'm
DMart, yes, Avenue Supermart.
Yeah, so as I said, I would look at whether this quarter was only festive season led or there is a sustainable pickup. I think the commentary would be very critical. Also, the mix, how has that changed? What's the other consumption basket they are adding, and how much, as I said, made that point to Neeraj, how much is the digital foray? Because you have to have a hybrid model in India. I'm also not a believer that only the digital model will work. I think even if you look at the likes of Blinkit, etc., the kind of stuff they are doing on dark stores or hidden stores, where you have pre-packaged stuff. This is your behavior pattern. So if I'm ordering something, they exactly know that I'm going to order X number of items, and based on that behavior, you have pre-packaged stuffs lying in the warehouse and the stores, and those get shipped. Right now, you're talking of ambulance coming in 10 minutes. So I think it's going to be disruptive, and that's the reason you have to be continuously added. Avenue Supermart model was their own stores, and that initially gave a lot of benefit because there's a bit of a real estate play there as well at some point of time if they want to monetize. But I think they have to go digital in case you to build this. And it trades at about 90 times still, despite correcting from 5,500 levels to 4,000 levels now. Just not cheap.